Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your weekend edition of your metal market update, and this is for Friday, the 12th of October, 2018. Now, we're approaching about 2:40 p.m. on Friday afternoon. The stock market's up a bit. Gold has given back gains that it had. It's closing at the lower part of the day. Silver's up a little bit, and the copper market's up. If you saw over the day today in the copper, China's imported quite a bit of copper, about 21% more than a year ago. And if you're looking at their trade with the rest of the world, their month-to-month trade surpluses are still ballooning. Now, is that because countries are, like the U.S., are front-loading things? We don't know where we're going to be with the next round of tariffs? Could be. Could it be that China's internally looking and building a lot of homes and bridges and city dwellings? Yes, that's for certain going on at this point. When we look at the grains, they had a bounce today. The energy markets bounced. Bonds and notes. There seems to be an inversion happening now. There's a good article that you're going to read in Barron's over the weekend. I think it was Robert W. Forsyth. I'm giving it from memory here. And in the article that he's put together, it's quite well explained how the market's transitioning from a period, and this affects the metal markets, is why I bring it up, where when the stock market was going down, the Fed was lowering interest rates. When it was going up, they were able to raise them, and now you've got the opposite. Now if the stock market's going up, the Fed's able to raise interest rates. It's very important to understand that this is a transition that is going on, and that it does impact the metal markets. Now, if we take a look at gold on the monthly bar chart, and on the weekend edition, what I try to do for you is I start with the monthly, and then I go to all weekly charts. Monday through Thursday, we do daily. But this has been in a bear trend with lower highs, lower lows, and each bar represents a month. So you're looking from right here, and I'm sure you can see that with our new high definition, the light gray line. It's very, very subtle there intentionally. But you came down, and now you're back into the Bollinger Bands. This is what you call either building a base or a top. It's one of the two. And the market has just been churning. You see that on the weekly charts for certain. On the weekly area chart of closes only, I'm looking at a market that has just gone from 1176.5 up to 1219.40 right now. It hit the upper 18-week average of closes and ran into resistance at it, just as I teach in my charting course. If we look at the chart now on the weekly bar, if I take this week off, you can see how the market had come down and then spent about 7-8 weeks just going sideways, and suddenly we have a move to the upside. This could be a breakout if there's follow-through, and that's the if. When I take a look at the swing lines, I do have a pattern of higher lows on the weekly chart and higher highs. Bullish. The market, if you take a look at the close, it looks to me like it's going to be just under the 18-week average, which keeps the bias downside. And one of the things I teach is when a market makes a big plunge, the first times that it bounces, often you get back to that 18-week average and the market tries to figure out what to do. You moved away from the lower Bollinger Bands back in August and just developed that sideways action. Should the market try to follow through further, the 200-week moving average of closes in this deep, heavy gray is waiting for the market as resistance, and possibly, if you can get a real run, the 100-week average, which is, I would expect this week, this upper Bollinger Band is going to fall. And remember, the Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. Therefore, they will fall and offer a resistance as they'll rise and offer a support zone. When we go to the momentum of the slow stochastics, well, this turned up right back here. This is what I call down momentum. The market's turned up, and they confirmed it when it got over 20 here. This was way back at this level, and look what the market's done since then. I think it's impressive because, again, momentum often leads price. Doesn't always do it, but often it does. The gold-silver ratio still has not turned on the longer-term charts to say, gee, this is the beginning of that move. This appears to me it's going to be after the fact if and when it happens. But right now, it still favors gold being stronger than silver on a weekly basis. When we go to the weekly bar chart of the ETF GLD, you can see how the market came back to the 18-week average, and that's where the battleground is. That number is 1556. You're right now at 1527, and for the week, you got up to 116.04. So that held its resistance. Now, the fact that the market looks like it's going to settle under it, I don't know that yet because there's still another 20 minutes or 15 minutes so left in that. But you do have a pattern of higher lows, higher highs. Closing over that number would add bullish momentum should it do it. Otherwise, you're sort of stuck right here. GDX, like the others, has a pattern of higher lows, higher highs. So I'm going to define the trend is up. It's neutralized because you're under the 18-week average and the momentum of the market is up. When you come to the silver chart, you've got a pattern of lower highs, lower lows. This is really a double top right here. So the key in this market, as I see it, is to get over that 1495 level, which then your 18-week average is right here, and it's going to drop. Right now, we're seeing that market drop about 10 points every week. So I'm assuming that this week we're going to be into that $15, $15.05 level, very close to that 1495 zone. In the copper market, you had a run-up back here 4 weeks ago, where you started getting into the resistance of the 100-week average in the 18. You can see that right there, and the first challenge of it stopped the momentum of the market. The trend up, higher lows, higher highs. You tried to extend, and then you had a big drop, so that put in a short-term trade top there. And this week, the market is still fighting, but it came back over the 18-week average. On the weekly chart, this is still a friendly chart until you take out 256.45, if the market can do that. When we come to the platinum market, battleground is the 18-week average. Look at how it keeps hitting it over and over. In the process, momentum is up. The trend is up as you have higher highs, higher lows. For the week, you closed higher. And for the week, if you look, 842.80 is well over 824.70. This trend is turned back to the upside in this market. In the palladium market, on the weekly charts, as you can see, you've got a week where you had a good break, an outside week down. Yes, you took out the 1063.50. So you've got a higher high, you got higher lows, there's no trend. And as I said, I thought this market, if you kept up with my dailies, was going to start losing to the other metals. I think it's showing that that's exactly what it's doing. Now we get to the dollar index, and look at this sideways action that the market's doing. Look at the battleground. You have hit the 18-week average for 5 weeks in a row, and the battle's become between the 18-week and the 100. You only way back here in the August timeframe got to the upper Bollinger Band. This market's running out of momentum, and you see that as the market's just going sideways on the slow stochastic. Now, it still has upside bias because it's going to settle over the 18-week moving average of closes, but I would not call this market any longer trending. And talking about a trend, how do you keep up with the market? This is actually my phone. And you can make your phone do exactly as mine does. Because what happens is you're going to be able to get and set up your streaming metals pages. You're going to be able to set up news just for the metals if you want it. My videos on the metals will come right into here as well. Yes, your charts can work there. And you can use voice activation to make all this work. Your phone's just going to pick it up automatically and do it. Price alerts, you can set them as well. You take a look. Here's the voice activation. You can say things like gold chart. And after you say that, it's going to bring it up with the way that you've set the studies on them. But it gets better for you because let's assume you want to do text to voice and listen to this.
And last traded at 1,212.2.
So you can set this up to play the way that you want. As I said, we get our messages, my videos when they're available, everything else. And it works on both Android and Apple phones. So you're really covering the gamut of them. Look familiar to you? Should. And of course, here you go, and you can set up your prices. This is the calendars of everything, and options galore on this. Yes, all the options, Treasury news if you want it, everything comes flying in. So how do you get it? Just give us a call. Go to our website. You can sign up for the free offer. You're going to need a user ID and password. So yes, you can download it from your Apple Store or whatever. Let us get you those IDs so that you can work with them. You can also click up here at any time. It'll take you right to our sign-up page. I'm Ira Epstein. You have a great weekend. I'll see everybody come Monday.